day before the boot camp showtime. Just to recap, I always like to do and recap what we had done in the room before I close the room. S&P continues being stuck in correction at decision point 2. So if you knew where this level is, you would know not to enter into it between the end of the minor trend spelled out by the price since very first week in July. Pay attention to how critical this level is, where price had struggled immensely every single time. Here's decision point 2, and this is what the price is pointing up to next. But there is a little bit of a glitch on the price. Let's take a look why it's extremely important what is happening currently. Because we are at incredibly powerful daily level, not far off. This is a reminder, know the levels. This is where S&P had struggled for 12 weeks. Everything spelled out by the price many months ago. If S&P will continue this scroll, we expect very powerful selling pressure not far off from this level because, reminder, this is the most important level in the market structure. Very important and very critical. We're already seeing powerful selling pressure. Exact same thing that played out on S&P 12 weeks prior from 1976. Significance of this level is exactly the same. Not far off, we're already seeing very powerful selling pressure. So buckle up. Let's see if it will continue. So far on hourly chart, I will tell you this. This remains key level to the downside. If this level will be broken, price will continue drastically lower. But we know currently not to touch S&P because it is only bearish correction. We are ignoring everything S&P is doing currently because all the levels spelled out by the price since the first week in July are highly respected as expected. So as far as I'm concerned, it's a bunch of baloney. It's a bunch of crockadoodle. This is bearish correction we ain't touching yet. We're respecting this level highly and we'll see if price has enough juice to blast through this level. Level respected to the upside and level respected to the downside by the structure the last 5 hours. You do not want to be caught up in correction. You want to participate in reversal. Big difference, and this level remains the key. Take a look at what oil had done and take a look where I had left everything on oil. Again, heads up. What did we discuss yesterday on oil? The very lovely, powerful bullish pressure and buying opportunity was at 102. Reminding you, knowledge is a key. If you know the rules, you don't need my hand holding. By the time we came to oil news, very bullish news, we said, ouch. You have to be pretty aggressive trader to buy this late. We waited extremely patiently and we shorted oil because our long from 102 was way overextended as oil knew to set up for rally well before the news. And what did I say before the room closed? I said respect 102.71. That level remains the key. This is where we closed our bearish trade before we closed the room. So again, we're monitoring oil incredibly carefully. We're seeing that currently buyers are in charge. This level to the upside remains the key. We ain't touching no longs on oil. Potentially that's going to be very corrective and very boring day because on daily chart oil is completely stuck. Level spelled out many months ago. Very powerful bullish rally that if you know the rules you had opportunity to take advantage of on daily chart is stuck. The end of the minor trend is here and price had been dancing here for the last 6 days between the levels. And that's exactly why we shorted oil. That's exactly why we didn't touch oil at these levels. So monitoring oil at these levels to see if sellers will step in. It's very unimpressive structure. And let's take a look at what S&P had done. S&P is still stuck at this level. Let me show you what will happen if S&P will continue further up to the upside. You remember, extremely important, based on daily chart, 1988 area. This currently remains the key. If this level is broken, my bias is definitely short.